Please welcome Travis Archibald.
So today my presentation is basically going to be similar to what I've done in the past. It's going to be a general update on what we're seeing in terms of the housing market on the island. I'm going to focus on the island in general, not just the Comox Valley, so you can see what's going on in different areas on the island. So I'll look at new construction, the resale market, and I'll start off by covering off some of the factors that other speakers have mentioned, some of the drivers of demand, some of the economic and socioeconomic factors that have an impact on housing demand in the market. So some of these factors, right now it's a bit of a balancing act. I think in the past, this is one key difference I've seen over the last couple of years. In the past, and when I was in school, you could build financial economic models where you could generally get an idea of all these different socioeconomic factors and how they impact housing demand. So when you build these models, you can get an idea of, okay, each of these factors, so GDP has this impact, the labor market has this impact. You can figure out their specific impact and then forecast activity over the coming years. But I think what we've seen over the last 3 or 4 years since the initial downturn hit was risk and uncertainty. Again, this is something Larry mentioned earlier. It's the key factor now. It's one of the biggest factors, and it has a huge impact on everything we do, both in terms of the financial markets and the housing markets. Everyone's a day trader nowadays. Anytime you see any positive good news or negative news coming out, you see it impacts the markets instantly. So if you're talking about the housing market and people looking to invest in something that's going to cost them a couple $100,000 or over $1 million, it's a big ticket item, and they're going to be a lot more cautious when it comes to this if they're seeing any positive or negative news. I know myself, I'm looking to get into the market, and when you're seeing everything happening now, it's tough to bite the bullet and buy something when you can know, oh, Greece could collapse, the rest of the euro could collapse next week, and prices collapse in half. So it's tough, and I think this is one of the biggest factors that we have to take into account now, is just that there's this uncertainty sitting around the market. So I think some of the key factors that I was mentioning, so general economic conditions. Larry mentioned his forecast for GDP growth across the provinces and for Canada. We're seeing similar projections, so positive growth, but again, I guess it's cautious optimism. We're seeing positive growth, but again, it's dependent on what we're seeing in terms of the rest of the global economy. So I've got a slide where I'll show some of the a key economic indicator that we typically use. Financial markets, I mean, that was one of the reasons why we could see prices build up from about 2001 to 2008, is we saw financial markets were strong, people were building lots of equity. So that's one of the keys. Nowadays, when we're seeing that the market's jumping around, you saw a big loss when the downturn hit, and now it's fluctuating around quite a bit. It definitely has a big impact on equity and what people can use in terms of purchasing. Local labor market conditions, jobs and wages, this is also a key driver of demand. I'll show a slide in a minute. It's definitely not the same situation we're seeing in Vancouver. I've got a slide that breaks down employment for BC and then Victoria and Vancouver, and for Comox Valley and Nanaimo, it's similar to what we're seeing in Victoria. We really haven't seen a rebound back to where we were pre-downturn. Availability of credit. Again, this isn't as much of an issue as we saw a few years ago when there was a lot of money, but banks were a lot more hesitant to lend. Now I think there's a lot of money out there. As Larry mentioned, there are banks looking to give out real estate loans, so there is money out there. It's just a matter of if people are willing to purchase right now. New MLI rules, mortgage loan insurance. So CMHC, we offer mortgage loan insurance. Earlier this year and last year, over the last couple of years, we've implemented a few new changes. So you've seen a lower maximum amortization period, a lower maximum refinancing rate. So this has definitely had a bit of a dampening impact on demand. Mortgage rates. This is one where I mentioned earlier, typically when you see rates are low, this is going to stimulate demand. Typically, that's what the relationship says. Where rates are right now, 5% average posted fixed 5-year rate, that's historically low level, yet we're still not seeing people jump back into the market. So you can tell that the risk and uncertainty factor is definitely outweighing the low mortgage rate situation. Prices and affordability, I'll show a chart later where we see what the gross household income requirement is to purchase across different real estate boards in the province. This is also definitely more of an impact in terms of the lower mainland in Victoria, where we're seeing that the cost of owning and the actual home ownership costs are a lot higher than what we're seeing in other outlying areas like central and northern Vancouver Island. New building code, this is one that's often overlooked, but next year we'll likely be seeing the implementation of a new BC building code, which will eventually have some impacts on the cost of home ownership. because the cost of new homes will likely be increasing with the new restrictions and the new code that's introduced. And finally, as I mentioned, I've been mentioning about since I started, uncertainty. Again, this is the big wild card that we're seeing now. So while you're seeing some factors like general increase in terms of economic output, in terms of the labor market, we're projecting an improvement. Availability of credit, we're seeing that strong. Low mortgage rates, while we see all these positive factors that should be stimulating the market, again, you've got a bit of an overhang with this risk where people are a bit hesitant to make that next step and to actually pull the trigger and purchase. So as I mentioned, this is one of the key factors we look at is economic growth. This is general indicator of how the economy is doing and in terms of how it should impact housing demand. This is an indicator that's produced by the BC Business Council. It's a quarterly indicator, which basically it's a composite indicator, which is a measure that uses 7 different general economic indicators for provincial economic activity. And so you can see things are trending along quite well after, I think the last negative growth we saw from quarter to quarter was in the second quarter of 2009. So we saw strong growth after that when we initially rebounded. Since then, it's slowed down a bit, and a bit concerning is the last quarter. In the third quarter, we did see a downturn. We saw a negative growth in this index, so it's a bit concerning, but until we see consecutive quarters of negative growth, then we won't be too concerned. And for the short term, we are anticipating positive GDP growth for the province, both this year, next year, and in 2013. Mortgage rates, so I touched on this. This is historical 5-year posted mortgage rate from 1973 to present day. So you can see where we're at now. It's a historically low level. So typically you'd think this should be stimulating the market when you look historically back in the early 80s when we saw rates as high as 22%. So you'd think this would be stimulating demand, but again, it's that risk factor that's hanging over everything right now. So in agreement with what Larry and Canadian Western Bank are predicting for the next few years, I don't anticipate rates to increase too much. Cost of funds should remain low. Bank of Canada, Carney's not going to want to increase rates too much, even if inflation's not a factor, because he's, with the U.S. not likely to increase their rates, he's not going to want to see too much of a disconnect between the two rates. The labor market, I mentioned this. So here we see it's an index level of employment. So I'm able to compare Vancouver with Victoria and the province in general. What's key here is you can see it's indexed back to mid-2008 when the labor market originally peaked before the original economic downturn hit. So you can see for Vancouver, there was an initial downturn in terms of the number of jobs. We saw fewer jobs around, but the recovery was pretty steady, and we've seen the number of jobs actually grow beyond to where it was before. I mean, a lot of that has been part-time jobs, but we have seen the full-time job segment of the market improve of late. A little more concerning is the Victoria market, where we saw a significant downturn, most of that full-time jobs. We saw a bit of a rebound, and then since then things have been pretty stagnant. We haven't seen too much in terms of job growth. We have seen some part-time job growth, but again, that's not what we're looking for when we're talking about the demand for home ownership. So we are anticipating some growth next year, not a lot, but some growth, so that is positive for housing demand next year. And in terms of the rest of the island, in general, we see similar trends for Victoria. So I've been looking at the Nanaimo and the Comox data of late, and again, it's fluctuated quite a bit because it is a smaller market, but in general, we haven't seen the full-time job growth rebound to where it was pre-economic downturn. Migration. So this is a factor that's often overlooked, and I think is one of the key factors that drives demand for housing. With birth rates as low as they are, the key to generating population growth, which generates new households, which generates a demand for housing, is migration. So we're talking about migration from other provinces, from other regions of the province, and from other countries. So this is net international migration, so looking at the number of people coming into the region or to the province, and it subtracts out those that are leaving. So it's broken down into two, international and interprovincial, and as you can see, the biggest component over the last few years has been international. While the bulk of this segment of the market, the international migration, goes to Vancouver at first, typically we do see some of that migration base does distribute itself amongst the other regions of the province. So we have seen slower migration levels for the first half of this year. Again, this has a lot to do with the Alberta effect. I mean, Larry mentioned earlier that Alberta's job market has been strong, their economy has been strong, and in general, their job market has been trending somewhat better than we've seen in BC. So a lot of that net interprovincial migration, so people coming from other provinces, has been going to Alberta as opposed to BC, and we're seeing some of our workers move to Alberta as well. As we do anticipate the BC labor market to improve next year and align more with what we're seeing in Alberta, we do anticipate the migration levels to pick up again through the second half of this year and into next year. So why is that important? Why is the international migration segment important? Well, this is a study that CMHC did about 5 years ago. In the peak of the price appreciation segment, when we saw prices grow over 10% per year from 2001 to 2008 in Vancouver. It was a study that surveyed homeowners and new immigrants into Canada in the three major centers, so Vancouver, Montreal, and Toronto. And what we found was within 6 months of arrival, 17% of new immigrants were homeowners. So this is significant. So this is when prices were increasing a lot, especially in Vancouver. And within 6 months, they're already assimilating into the local housing market. Not just renting, they're actually purchasing. Within 4 years, more than half were homeowners. So, I mean, that's pretty strong link there between migration and home ownership, and that strong demand for housing that we saw over that period. And I think it's another reason why we're seeing that international migration is key to household formation and to home ownership demand. While I don't have any migration numbers with me for the Comox Valley, I think a good indication is household formation. So every year BC Stats produces household formation projections. It's their people data set. And it basically gives you an idea of how many new households are formed in different local health areas each year. And I've broken it down into different markets across the island. And if you're looking for the Comox local health area, which includes the Comox, Courtenay, Cumberland, you can see that over the last 10 years, from 2001 to 2010, on average, roughly 450 new households were formed per year. And why is this important? It usually gives you a good indication of the number of housing starts which we started each year. Over the next 5 years, from 2011 to 2015, on average, BC Stats is projecting just under 17 new households formed per year. So we're expecting more households formed per year over the next 5 years than we saw over the last 10 years. So there will be growth in the region, and this has to this is important for the demand for housing. Affordability, this is a factor I mentioned earlier, which is more so of an impact in Greater Vancouver and Greater Victoria with the level of housing prices where they're at. But what this basically is looking at is the level of gross household income that's required to purchase a home. So basically we're assuming 30% of your gross household income goes towards servicing your debt. So this is based on average resale prices across the different real estate boards in the province. So it includes all dwelling types, so single detached homes, condos, and townhomes, patio homes. It's using the Q3 2011 price. It assumes the currently posted 5-year fixed mortgage rate and 20% down payment and a 25-year amortization period. So based on those numbers, looking at what you would require in terms of gross household income to service that debt, you can see that Vancouver Island, for the Vancouver Island Real Estate Board, they sit somewhere in the middle of the different boards across the province. So you look for Vancouver Island, roughly $65,000. That's what your gross household income requirement would be to be able to purchase a home and service that debt each month. BC North, you're looking at under $50,000, probably around $40,000. Then you look far on the right-hand side in Greater Vancouver, and you're looking at about $140,000. So it's a much different picture what we're seeing there. So on average, and this is including all dwelling types, if you're looking at, I was looking at these numbers a couple weeks ago for Vancouver, if you're looking at purchasing a place on the west side of Vancouver, a single detached home, you'd need about close to $500,000 in terms of gross household income to service that debt if you're putting, and that's putting 20% down. So it's a lot less unaffordable than what we're seeing in other markets. So relatively speaking, we're not doing that bad on Vancouver Island compared to some of the other markets. To put it into another perspective, a lot of people ask, should I rent? Should I buy? What should I do? Well, it's a personal decision, of course. I mean, some people, if you can rent and cash away some money, save some money each month and put a bigger down payment down, then yeah, it's a good option, but some people just can't save. So it's a lot tougher. But if you're looking at comparing renting with purchasing, so just I decided to take a look at this and see what the gap would be. Using annual rental market report from what CMHC produces each October, looking at a 2-bedroom apartment rent, compare that with what your monthly mortgage servicing cost would be to own. For this case, I looked at a single detached home, just seeing what the gap would be to see what you could potentially put away each month to put down on a down payment on a house after a couple of years. You can see that there's quite a bit of savings to be had through the years. And again, this is inflation adjusted numbers. So you can see in October 2010, the average 2-bedroom rent was estimated at close to $800 per month in the Courtenay ECA. And that compares to over $1,500 a month to service your average mortgage, single detached home mortgage, assuming 20% down, 25-year amortization rate. So you can see there's a significant gap there between purchasing and owning. I mean, I'm not assuming this is long-term. You can't really compare a 2-bedroom purpose-built apartment with owning a single detached home or living in the unit. But again, for the short term, if you're looking at saving some money to be able to put a bigger down payment down at some point, then it does give you a bit of an idea of what you'd be able to save. So that's basically my recap of what's driving the market and some of the different factors. Again, it's a bit of a balancing act right now. It's really tough to say because you've got all these factors that should be driving the market. All these forecast growth in terms of labor market, GDP, low mortgage rates, all these factors contributing positively to housing demand. But then on the other side, you've got that the whole issue of risk and uncertainty, what's going on in Greece and the rest of the euro, and if that's just weighing down on everything. I think everyone's just a lot more hesitant now, and they've seen, between 08 and 09, we saw a brief price correction, so you're not necessarily going to see prices increase every year. I think you just see a lot more hesitance in the market right now. Myself, I just wish Greece would collapse or something would happen so that you can get the ball rolling and get back to where we can build upon growth again and get back to some more stable times. So in terms of the resale market, here we see the key barometer of resale market activity, the sales to new listings ratio. It's seasonally adjusted data, take out some of the seasonal factors we see. And it looks at the BC ratio versus the Vancouver Island Real Estate Board ratio. It's quarterly data. And where you can see now is, for a while there, it's been pretty volatile the last couple of years. Since the downturn, we've seen things change up quite a bit, going from the initial downturn back to the extremely quick rebound that we saw, then things bounced back around since then to try and even up. Right now we're back down into buyer's territory. But again, worth mentioning here is the variation that there is within the Vancouver Island market. I think it's tough using aggregate measures for anything, especially for real estate values. You look at Vancouver Island and we're seeing that it's in buyer's territory, but if you look within the Vancouver Island Real Estate Board boundaries, you can see, volumes are actually up in the Comox Valley this year compared to last year, and in Campbell River and in Parksville, but they're down in Victoria, they're down in Duncan, they're down in Nanaimo, so you see a lot of variation. And then within the Comox Valley, you see also variation from Cumberland to to Comox to West Courtenay to East Courtenay. So it's really tough to get a general gauge just by looking at an aggregate, but in general terms, this is what we've seen, a deterioration in conditions compared to last year. And we've seen it for the Victoria Real Estate Board, for the Greater Vancouver Real Estate Board, for BC in general. So in general, we've seen some deterioration. We've seen sales slow down a bit, and we've seen listings pick up a bit. In terms of what we're anticipating for next year, I'm cautiously optimistic that we're going to see things return back into balanced territory next year, and hopefully for a few years to come. But again, I think it was this time last year, I was predicting that mortgage rates would probably be increasing quite a bit this year, and that they'd probably be 200 basis points higher by now. I'd have buddies ask me, I've got to refinance, my 5-year term's running out. Should I lock into a fixed rate or should I keep with variable rate? Of course, I tell them to lock in at a fixed rate, and I mean, they stayed with a variable, of course, and now they're laughing because they've been saving God knows how much per month. So it's tough. I mean, the last few years have been really tough. I've been doing this for 4 years now, and I think I started right before the market collapsed, so I haven't really seen stability yet, so I'm hoping that's to come over the next couple of years. So active MLS listings. Sometimes our business development officer for the island, Fran, she's asking me, clients are asking what's going on. We've seen lots of supply, so I decided to go look at what we're seeing in terms of supply. So the number of active MLS listings on the market across the different regions. So I decided to look at where we're at the end of September compared to where we're at September of last year, and then historically over the last 5 years, what have we seen in September, just to get a gauge on, is there a lot of supply on the market, or is it just compared to last year? So looking at Victoria, you can see that there's considerably more supply on the market. I think at the end of September there was 19% more listings on the market than there was the year before, and historically high level, so that was a bit concerning. But if you look at the other markets, you can see that Cowichan Valley, Nanaimo, you're actually seeing fewer listings this year than last year, and I think the similar is the case for the Comox Valley. So those are positive signs. We haven't seen that buildup of supply in the market. We have here price index. Okay, this is an interesting one. So again, I think I was chatting this earlier with Larry and Greg about prices and what we've been seeing. You see the BC prices in headlines, and you're seeing, prices are increasing a lot. They've skyrocketed since the downturn. Well, it's not necessarily the case. It's just the relative importance of the Greater Vancouver market in terms of the BC market is so strong that when you see the BC number, it's generally a reflection of what you're seeing in Greater Vancouver. So here again, it's an index of average MLS prices. So prices in general peaked in the first part of 2008 in most markets. And then after that, we saw a brief correction until about the first quarter of 2009. And then things rebounded. And since then, this is for the Victorian market, we've seen things have been quite flat. So relative to where we are in the first part of 2008, you can see prices are actually below where we're at. So we've seen actually a decrease in prices since the original peak we saw. Looking at Nanaimo, again, you see a similar situation where prices initially dropped, they picked up, and then they've been fluctuating ever since. Comox Valley, similar situation. So we haven't seen, that red band basically just looks at 5%. The initial level plus or minus 5%, so you can see there hasn't been much variation. Then you look at Greater Vancouver, and you've seen things just skyrocket. So it's not even comparable. You saw the initial correction that we saw. You saw things rebound, and then since then they've skyrocketed back. So I didn't have the other. Okay, yeah, I think since the original peak that we saw pre-downturn, prices are up about 23% in Greater Vancouver. So they've increased quite a bit. And if you break it down into different dwelling types, it's the single detached side that's accounted for all the price appreciation. So again, it's a different market, and I think this is actually positive that we've seen some price stability after if you look in the 1990s, you saw pretty steady prices. You might even saw a few years where you saw negative real growth in prices, but then from 01 to 08, that's when we saw the significant gains in home prices. So I think over the next couple of years, I think we're in store for some more stability and some flatlining of prices for a few years in the island markets. So where are prices now in terms of level terms across the different markets? Looking at Q3 prices, your average MLS price across the different markets. Looking at single detached homes, I included Victoria and Greater Vancouver to the Vancouver Island Board regions just to give you some perspective. Put them on the outside so you can see that prices are definitely a lot lower than what we're seeing just south of here in Victoria, and a lot lower than what we're seeing in Greater Vancouver, where your average MLS price in the third quarter was over $1.1 million. So if you're looking at Comox Valley, you see just under $400,000. So a lot more affordable than what we're seeing in Vancouver and Victoria, but slightly more expensive than what we're seeing in some of the more remote, if you go to the North Island or the Port Alberni markets. Attached homes, so looking at patio homes, duplexes, you can see a similar story. You've got Victoria and Vancouver on the outside, and then you can see the highest prices are in the Comox Valley, between $300,000 and $400,000. So there's not that much of a difference between the single detached and the detached prices in the Comox Valley. And then finally, apartment condos. Definitely, this is the most affordable segment of the market. So if I was to show you that same affordability chart of what it would take in terms of gross household income to service your monthly mortgage payment, it would definitely be a lot lower than what we were showing in terms of the average. So, when people are asking, is it still affordable to buy? Well, yeah, if you're willing to look into the more denser forms of housing and not necessarily look into single detached housing as the primary type of housing. In terms of new construction, we're seeing a bit of a similar situation across the island. I start off just by showing what the different markets across the island account for in terms of urban Vancouver Island new construction activity. So if you look over the previous 5 years from 2006 to 2010, I break down total housing starts into the different markets. You can see Victoria CMA accounted for about half of all housing starts across the island. So you see just under 10,400 in the Victoria CMA and just under 10,700 in the other urban centers, which includes Duncan, Nanaimo, Parksville, Comox, Campbell River, and Port Alberni. So starting at the south end of the island in Victoria, I show you a longer time series here just to show, I mean, a lot of people think that the last few years from the mid-2000s of the last decade when we saw real buildup in activity in Victoria, that was the peak of activity. But if you look back into the late 80s and early 90s, you can definitely see that there was a significant buildup period as that, then as well. It's more of the mid-90s period where we saw a bit of a slowdown. 2009, that was the slowdown year. That was after 2008 when the resale market was hit. So you saw that trickle-down effect from the resale market to new construction. 2010, we saw a rebound. So we rebounded beyond the 10-year average for new construction activity in Victoria. But this year, if you look at the two far right lines there, that represents year-to-date 2010 and year-to-date 2011. So the first 10 months of the year. To see where we're at compared to last year, you can see activity's down significantly in Victoria, and the bulk of that's due to fewer single detached homes started. So we're still seeing a lot in terms of multifamily construction in the pipelines, which I'll touch on in a second. Here we see the number of units under construction. So the pipeline of activity, so this is any given time, how many units under construction in Victoria. So you can see in mid-2008, that was a bit concerning. In July, we saw close to 3,600 units under construction at one time. So the bulk of that being apartments. To put that into perspective, earlier I showed household formation per year, which gives you a bit of population-based demand to tell you how many new homes you need to meet the population-based demand. In Victoria, you look between 1,800 and 2,100 new households formed per year. So when you're building 3,600, you can see that it's a bit concerning. Now we can see those levels have come back to a lot more healthy levels. So you can see around 1,000 single detached, semi-detached and row homes, and just over 1,000 apartments. So much more in line with what we're seeing in terms of population-based demand. Inventory, this is somewhat concerning. We're seeing close to 300, doesn't show it in the legend there, but the blue line represents the number of apartment condos in inventory. So these are new units that have been built that haven't yet been absorbed. So nobody's bought them or moved into these units. So there's still 300 of these units sitting on the market, yet we're still seeing quite a bit of new product being built. Why? I think the biggest issue, which I'll mention when I summarize later, is price point. I think since the downturn, people are a lot more price conscious. They're more aware of what they're buying. You're not seeing as much demand come from other markets. So based on the local demographics, local income profiles, you're looking at meeting local demand where people are looking for more entry-level condos. They're not necessarily looking for the large 2,000 square foot condo with granite everything that's going to cost them $600,000. They're looking for more entry-level units, and that's exactly what you're seeing now happen in Victoria downtown. Is a lot more lower-priced product come onto the market. Between under $200,000 you're seeing to around $250,000. I think that's the sweet spot in the market right now, and I think if that product's built, it'll get scooped up quickly. So I think some of this inventory might just be the higher end stuff that's still sitting on the market. Looking at Nanaimo, here we see a similar picture. Late 80s, early 90s, we saw even more significant buildup than we saw over the previous years. One interesting note I always like to point out when you look at Nanaimo, almost every other market in BC, you saw a downturn in 2009 in terms of new construction activity. Nanaimo didn't see really much of a downturn. They still stayed above the 10-year average. So they continued to trek along at a healthy pace. This year we've seen a bit of a downturn, not as much because we've seen quite an increase in terms of multifamily construction. Well, we have seen the decrease in single detached side of the market. Multifamily hasn't been as pronounced. Similar situation when you look at the number of units under construction. In 2008, they saw quite a few units under construction at any given time. Those numbers have come down to a lot healthier level and much more in line with population-based demand. Inventory, similar situation. About 150 new apartments that are in inventory right now, waiting to be absorbed. Looking at the difference, so here's the difference between your average resale single detached home price and your average new home price. So the new home price, this is data that we collect when we do our starts and completion survey and our market absorption survey. Once the home is purchased, we get an idea of what it sells for. So you can see that there's still a significant gap looking at the average single detached price of an Nanaimo new home versus a resale home. So you see a significant gap. But yet, another interesting fact is you look and it's still under $500,000, the average resale or the average new home price when absorbed. So, I mean, you've seen that big decrease in the number of single detached starts this year. But, I mean, a lot of people point to HST as the big reason, but if you're looking at the threshold level is $525,000 concerning getting the full rebate. So you have to think that there's other factors at play than just the HST for why we've seen a decrease in the number of single detached home starts. Looking at the other segments of the market on the island, so we've showed Victoria and Nanaimo, we've got quite a bit of historical data there. Looking at the other major markets, so Duncan, Parksville, Courtenay, and Campbell River, looking at the number of year-to-date housing starts this year, so the left-hand side of each market compared to year-to-date 2010, so January to October of last year, we've seen a decrease in Duncan, a decrease in Courtenay, a decrease in Campbell River. Parksville is the only one where we've seen an increase. So looking at the Comox Valley, you can see that there's, in general, the same number of multifamily units. It's the single detached side that's dropped off. Same with Campbell River and Duncan, which again confuses me because you look at the new single detached home price, and there's not that many that are above that threshold level, so you still be getting your full rebate. So it definitely points to other factors at play, and I guess probably in general some more hesitance in terms of market activity and global economic conditions. Now, the pipeline of activity across the other markets. So I showed you what was going on in Vancouver, in Victoria and Nanaimo, where we saw a big buildup in mid-2008, and then things come back to healthier levels now. Similar situation here. The red line represents Courtenay, so at any given time, the number of units under construction, it was quite high in 2008 and even in 2009. Now it's come down quite a bit, and it's sitting at about 300. But again, if you look at what we were projecting, or what BC Stats is projecting in terms of household formation, so demand, we're looking at close to 700 households per year. So you could almost say that that's undersupplying what demand would be asking for. But in general, we've seen across these other markets, since peaking in 2008, we've seen the general level of construction activity come down quite a bit. So forecast for 2012, this is tough. I guess the best thing I can say is I'm cautiously optimistic with what's going on. The last couple of years, yeah, it's been a whirlwind. We've seen a lot of volatility in both the new construction market and the resale market. And again, this is all linked to what we're seeing in terms of global economic conditions. I was predicting stability last year, but we've seen some more volatility this year. I think if we can just see conditions improve in Europe slightly, I think we're definitely on the right track. But our base case is assuming that things get accomplished in Europe. We proceed on. We see, in general, flat resale prices. We see a slight increase in new construction activity and in the number of resales next year, but likely not back to the historical 10-year average, but gradually improving. So over the short term, we are seeing some improvements, and I'm anticipating we get back to some more stable times next year, hoping no other global economy decides to crash over that period. So that's in general what I'm forecasting for the island markets. So in summary, drivers of housing demand, balancing act. This is the key. I mean, most indicators suggest there should be a lot of demand for housing right now, but you have that big factor of uncertainty and risk that's still sitting there. So as long as the whole Greece situation and the Eurozone issue can settle itself out, I think we're poised for those other positive factors to more than offset risk. Price point is key. So I mentioned in Victoria that this is huge especially for condos and for single detached homes. I think with all the risk we've seen in the last couple of years, buyers want to be aware of what they're purchasing. They want to know exactly what they're paying in terms of mortgage rates, exactly what they're paying in terms of price, and they want to know what they're getting. And I think they're shopping around a lot more than what we've seen historically. So that wraps up my overview and a bit of an outlook in terms of the drivers of demand, what we're seeing on the resale market, and what we're seeing in terms of new construction. Feel free to contact me if you have any questions or need any information. Thanks.